Good morning and what's up? Happy Friday, everyone, and welcome to the accelerated update. So I just kind of briefly wanted to go over the opportunity that I'm seeing in kind of the macro kind of environment that we're running through right now. It's been a bit since I've done a live update, working on a lot of things with the business, trying to help make it grow. So anywho, try to do at least one update a week while we get things growing. So anyways, that being said, guys know I like to focus on the NASDAQ. I feel like tech stocks, the tech industry is going to be, again, for specifically America, it's going to pave the way for the future. So that is going to be the primary index for as far as I can see. So anyways, as we can see, we are still in a downtrend. Price tried to break out, momentum-wise above the long-term downtrend that I had, and so it was after that, it was a matter of seeing, okay, well, is price going to stall? Is it going to continue? Is it going to reverse? What's going to happen? And so as we see that the Fed still has its foot on the gas trying to raise rates to battle inflation that seems to be persistent and heavy, that it is going to continue on its path of raising rates, and essentially it's going to force us into a recession. I think that the statistic is that there's no time in history where the Fed hasn't pushed rates over 5%. Or from lower than 5% to above 5% and hasn't triggered a recession. So I think that we're still kind of, the main market's trying to battle that. Everybody wants to put on the positive hat and say that, things are going to be just fine. But I think the deal is that things are not going to be just fine. So that being said, as traders, we have the ability to look for and find opportunity, whether that's the up or the downside. So, so stock market is down. Interest rates are flying higher and inflation is high. So what do we do? So one of the things I wanted to look at was, point out two things, right? So as long as the stock market's going down, right, or the long-term trend is down, then we don't want to be long equities or anything that is going to be delta positive to the stock market itself, right? So that includes crypto and whatever else. Now, it's been well established that I have a long-term position in crypto. I will be continuing to add upon that. That's more of an investment at this point. It has been an investment. I've held it for, a year or two now and added on the dips. But we are now in way negative territory. Not from where the position was established, but just, considering the overall, right? We were looking at Ethereum at being 4,900, at the beginning of the year, and now we're at like 1,500, right? Price continues to go lower. But we'll be watching those trends and all that. But anyways, the biggest thing that I wanted to point out today is that I still think that, again, commodities have a huge opportunity in the future. I think some of the biggest trends, they were talking about the super commodity cycle. And so now that's taking essentially a breather because recessionary fears and inflation are going to trigger that, and along with a strong dollar, right? The dollar has been insane, and that's one of the major things that we're going to look at because we're looking for that trend to reverse. But when recessionary fears come out, right, that is looking at future lower global growth, right? So that is an anticipation of everybody consuming less of everything, including and specifically with emerging markets, right? Emerging markets commodities are tied together very, very tightly. So if we are expecting lower global growth, then we're expecting then commodities are not going to be as intensive, right? That's your copper, that's your steel, that's your oil, all these different things, which are when the whole global economy is booming, those things are in high demand. So what is going to happen is the prices, as typical, they're going to get, I have a freaking ad right over my face. This is awesome. All right. So anyways, that was excellent. Where was I? Prices are going to, as they tend to do, right? They overshoot to the upside and they overcorrect to the downside. Okay. So as price overshoots to the downside, right? That is where we're going to find opportunity, right? We're not looking to catch the falling knife, or you can, if it's a long-term position, that's fine, where we're going to be able to get things, in value, right? Like oil. I've explained and laid out my thesis for higher oil and gas prices for the long term. I think that's where we're still headed. So as price continues to go further and further lower, that is going to be an in-value proposition for any kind of long-term trade. But we're going to want triggers and stuff that are going to break us, that are going to switch kind of the focus and the momentum, and that's where we're going to want to be kind of like swept into the trade and not just like I said, like try to catch a falling knife. So let's look at the dollar. Okay, so the dollar has been flying, right? It's crushing all these currencies, right? But it's actually making things cheaper there. And so when we look at this, okay, which again has just been insane. Let's see if I can move me over here. All right, this is nuts, right? So we haven't seen anything like this in a long, long time. So this is the weekly chart, right? So by far, that's new highs in the weekly chart. So we're headed back to the early 2000s, right? Seemingly that's where we're headed. And as long as we are on this anti-inflationary, or not anti-inflationary, I guess anti-inflationary easing, right? We're no longer printing money. We still are to maintain the deficit, but we're no longer doing quantitative easing or anything like that. And so as we're raising interest rates, right, the idea is that is reversing the effect, and it's trying to make more demand for dollars instead of pushing getting rid of your dollars, right? So this is it's like a weird place, because usually with the way that inflation works, right, when things are inflationary, you're trying to get rid of the dollar. So as they're starting to, and the market is a forward-looking mechanism, right? So this whole deal of the dollar strength and all this stuff is backed on the fact that we're doing more to combat the inflation and being the reserve currency than most other countries are doing in the world, right? So it's driving the USD higher as more of a safe haven asset in the meantime. So what we're looking for is this trend to reverse, okay? And I don't think that that's really gonna happen yet. I think that, like I said, the Fed is on its kind of war path. Hell or high water, it's going to continue to raise rates, and it is going to continue to try to combat inflation that way, which isn't necessarily a bad thing, except for the fact that it's going to put us in a recession. It could potentially crash the economy, crash the stock market, and all that if things get really bad and panic starts to set in, right? So as we've seen in the past, like the 2008 financial crisis, a lot of that stuff hasn't been resolved. We have like quadrillions in derivative debt now in the system, in the global system and stuff. So there are going to be probably cracks at the seams, and there are going to be some big players that could potentially fall, and that creates ripples in the whole system and could bring the whole thing down. So anyways, what that does is for sure it's going to guarantee that we have opportunity in the future going forward. So again, this is kind of a macro theme. What I'm looking for is eventually when things do kind of top out, when it looks like inflation is going to start to taper and head down, we'll have to watch the Fed to see how quickly they get involved with reversing their policy. And then at that point, then we will probably start to see dollar weakness, and we'll wait for kind of like the momentum trend lines to break, and then that's going to trigger kind of reversal, A, in a lot of the other currencies around the world, but B, in a lot of the hard assets. And that's probably when we're going to start to see a shift in the stock market itself. But that's where I tend to think that that's where we're going to we'll switch from a tightening to a loosening, and then potentially a quantitative easing program again as things get out of control. The stock market crashes. We got to save the financial system, and all that happens again. And it's going to unleash a crazy amount of inflationary spending again, and that's when opportunity is going to come for the second half of the commodity super cycle, I believe. So in the meantime, we'll be watching that. I think that's pretty cool. That's kind of like the biggest mega theme that I got going on right now. Still looking into more shorter term trades and opportunity in the meantime. But anyways, wanted to share that. So hope you all have a happy and blessed Friday and weekend, and we will catch you guys next week.